Good morning, guys. This is a quick voice check. Let me know if you guys hear me a-okay. And while you guys wait, we'll be starting in around 5 minutes. Please go ahead and hit that like button. If we do get enough likes today, I will be doing something a little bit different that those of you who are really interested in trading, learning how to do this for a living may be interested in. So go ahead, hit that like button, hit that subscribe, hit that bell notification icon. We'll be starting very soon. All right, let's get the show started. And good morning, good morning, good morning, good morning. My name is Sean Dexter, and I welcome you back to the Mango Grove for your daily live stream. Hey, it is the weekend, so I wanted to do something a bit different today, but Bitcoin wants to have price action while we do our live stream. So I do want to talk about the price action, but at the same time I do also want to inform all of you in this live stream that right after the technical analysis I will be doing a mini impromptu presentation that I just got inspired to do after having a conversation with one of you who did PM me. And let me just go ahead and quickly show you guys what I have in store for you guys today. Essentially this is just the slide template that is from the seed program that I'll be using. We have an outline, and I'll be talking about this as soon as we are done with our technical analysis. Essentially, I do want to touch on these points. They're really important for all of you guys out there who are looking to be traders, right? It's important to understand what you control, understand your edge, and how we'll be putting those together and talking about this little concept of potential when pertaining to your trades. Right now, we're not going to start with this because Bitcoin is doing something really interesting. So is Cardano. So we're going to switch back on over to the charts, and we're going to start like we usually do by saying hi to our regular seedlings in here and our Mongolians. We have Ken Kasaji, we have AJ, we have Kevin in here as well. No, but this isn't the Kevin I'm looking for. But hey, Kevin, how's it going, buddy? Bob Lebowski says BTC is in an accumulation zone. How's it going, Bob? I did read a message from you that I did want to... Okay, right over here. Bob says, I'm screwed. I'm so screwed. Leverage my house to buy the pump. I really hope that you're trolling there, man. But if you did, we can talk about that. He says, I thought we were going to keep pumping. I'm so screwed. Oh my gosh. So... let me know if you're trolling, because I don't want to talk about that if you are trolling. But going on up over here over to the chat, who else do we have? We have GMO, we have Noel, we have Alex, we have Lowe's. How's it going, guys? How's it going? I do want to jump on over to the charts ASAP today because I don't want to spend too much time in here. But we do have Lindika, we do have Siddharth, we do have Mad Stories. People are rolling in now. We do have Benjamin in here as well. How's it going, guys? How's it going? Okay, so today I do want to focus on Bitcoin, Cardano, and perhaps we also look at VeChain because we've been getting requests for that. But I do want to jump on over to those slides really quickly. But do you guys want me to just start with the slides? Let me know. If you guys want me to skip the price action today and start with the slides, we can do that. I do want this to be a more relaxed stream because it is a weekend. And yeah, let me know in the live chat. Do you guys just want me to do a quick overview of what's going on with Bitcoin and Cardano? We can do that, and then we can talk about yeah, then we can switch on over to the slides. But hey, this is a trader's market at the moment. If you are a trader, you are loving this price action. There's some really I don't say easy, but obvious trades that we can take. And yeah, there's a difference between easy trades and trades that are geared towards traders who understand these market conditions. Okay, so GMO says he wants an overview. Benjamin says only Bitcoin is important. That's I'm with you on that, buddy. I'm with you on that. Mark says, yeah, let's have a Bitcoin overview. How's it going, Mark? Wolvie's in here too. Wolvie says, same, stream woke me up. You guys have an alarm for the stream? That's freaking awesome. Tekka says, what are your thoughts on Cardano? Okay, so it seems like people do want an overview. Siddharth says he wants to start with the slide. Siddharth knows the importance of the theory behind trading as opposed to just getting the calls. But at the same time, we are doing some interesting things, but not so much, right? If you guys simply ignored all the price action that happened after the the stream, right? After the previous stream we did, we haven't really done much, right? Nothing special at the very least. We've simply done what we discussed we do, right? We're looking for Bitcoin to consolidate over here. Well, that's what Bitcoin is doing. So I wasn't too surprised that Bitcoin did see a rejection over here at the zone at around 40,000-ish, right? We're looking at a daily level, I believe, right over there. Yeah, right over here. There was a daily resistance level coming in on those candle closes, candle opens at 40,656. That was transpiring, right? The retest of that level was taking place during that live stream, and I was pretty certain that we were going to see a pullback over there. There's a little bit more lining up with that too. That made me really hesitant, or I don't say hesitant. I wouldn't trade a breakout over here, right? There was no way. We had the 200 daily moving average over there. We also, I believe, had cloud resistance on one of the time frames, and if you go ahead and turn on your 200 exponential moving averages as well, we do have that in there as well. Then you go ahead and turn on your 21 exponential moving average, we have that overhead as well. So we have all these resistance levels overhead. We also had this daily horizontal resistance level all overhead that Bitcoin needed to break through. Now, I wouldn't say that there was no way Bitcoin was going to do that, right? There's always a probability that something crazy happens. But even then, at the most, I would have been looking for a wick on over to the Tenkin and the 21 EMA, right? So you'd be looking for something like a wick onto the Tenkin, close underneath the 21 EMA, and consolidate between the 200 moving average and the 21 EMA. That was like the best case scenario for Bitcoin, but even then we still had the 200 moving average and the 200 exponential moving average to contend with, right? So now this isn't a death sentence just because we did let me just confirm that you guys can hear me. Okay, you guys seem to be able to hear me. It isn't a death sentence that we saw resistance, right? It is expected. This is how consolidations form. This is how we get the rounded bottom over time though, right? That's the key question over here. Do we see accumulation in this zone now, or do we see redistribution? That's the big question that will give us our edge for the next trade. The key thing that we want Bitcoin to do moving forward now is to hold higher lows. If you guys do remember from the previous stream, we were talking about, okay, we are either looking for Bitcoin to hold a high low at around 36,000, 35,000, or at the very least somewhere above 34,793. If it starts closing daily candles underneath 34,793, I'd be looking for 30,000 to get retested yet again. Okay, it's as simple as that. It's what we talked about in the previous stream. Nothing has changed. So again, let's reiterate. If we don't hold 35 to 36,000, at the very least, we should be holding 34,600. If we see daily candle closes underneath there, well, we'll be looking for a move down to 30,000-ish, perhaps testing these lows over here on this wick at 29,700-ish. So Bitcoin has a lot of work to do, and the bulls have a lot to prove over here. Momentum is in the bears, and I will trade in that direction until the bears, or rather the bulls, prove themselves. And the way the bulls can prove themselves now is, well, essentially, I want them to retake all these moving averages and exponential moving averages. That's the easiest way for all of you guys to be looking at this. Okay, I will be looking at structure, right? Because I'm more experienced and I can trade price action. Another note on this, by the way, guys, especially those of you who are new, you're going to hear a lot of traders tell you price action is king. Structures king, blah blah blah, and they aren't wrong, okay? But as a new trader, for you to understand price action and to understand structure is really difficult. You need market experience, and there's no reason to not use these indicators that are available to you before you get that market experience. So while I agree that price action is important, I do not recommend it for new traders, all right? Do not trade price action, because you need to understand price action is something that is really subjective, and you need something that is objective, something that you can't interpret to fit your emotions, to make it easier for you, right? Easier to hold on to a losing trade, easier to get into a trade that you shouldn't be getting into. Price action will allow new traders to what's the word I'm looking for? To let their emotions get the better of them, right? Price action price action allows new traders let their emotions get the better of them. you need something that is more objective, and that's why an indicator will really help. And that's why I always recommend the Ichimoku. Even though Ichimoku looks complex, it's actually really easy. I do have a couple of videos out there that you guys can go ahead and watch the educational playlist where I talk about EMAs versus SMAs, and there are 2 videos on Tenkin and Kijun. Go ahead and watch them. Okay, it's on the YouTube channel. So wow, I ranted over there. Jesus Christ. But the 200 moving average is the first line that you guys should be looking for the bulls to retake. The 200 exponential is not too far away. It's right overhead at around 41,000. After that, what we are looking for, right, you see the slope now on the 200 exponential is beginning to curl down, guys. That's not a good sign for the midterm bulls at all, and this may cascade onto the higher time frames too. So what we want now is for price to start living for a few candles above the zone, so that we have the 200 exponential at least flattening out and then eventually curling. More importantly, we want the slope of the freaking 21 EMA to start reversing and living and curling underneath price. There's a long ways before all of that happens. All right, so in the midterm, bears are in control on Bitcoin, and I'm going to be looking at it that way until we start seeing that rounded formation and something like this. While this is happening, right, while prices beginning to consolidate in the zone, we're going to see the 21 EMA come underneath. We're going to see the 200 exponential moving average perhaps even flatten out. Things are going to shape up. Or the bear case is going to be this starts being a distribution and we break down. All right, be on watch for both scenarios. Be on watch for both scenarios. We can go ahead and look at the lower time frames for the bears. All right, so the bears are loving this right now. So we did see rejection. This is a lower high. This is a lower high. I wonder if we did have bearish divergence right over there. Most likely did. Right over here, yeah, we did have bearish divergence, right? You can see how the oscillator has come up way higher than this high over here, even though on the price we had a higher high compared to this price. So this was a bearish divergence. There was too much going on for the bears. So they had too much in their favor, right? So bearish divergence, seeing your follow, not seeing follow through just yet, but it is activated. And if we do close a 12-hour candle underneath 36,598, I will be looking for that move all the way down to the bottom of this falling channel that the bulls did break towards the upside. It's not going to be the best look, but at the same time, if the bulls do come in and step in over here, we may see this flip into bullish divergence, right? Let's go ahead and look at the 4-hour time frame. Is there a chance of any bullish divergence playing out over here? Actually, there's a chance, but again, it's grabbing onto straws over here. Let's go on over to the daily time frame. Daily time frame actually does have bullish divergence playing through, right, between here and here. Again, we want to see the follow through though. So again, we do have the bulls beginning to formulate a story that may go in their favor over the next few days. Okay, so if we do see triple bullish divergence formulating into the bears not being able to see follow through on their bearish divergence onto the bottom of the range over here, well, that's your bullish case for accumulation, right? Now you can start formulating a story to look for that move towards the upside. Can you guys hear me, by the way? Am I going all over the place? Am I all over the place? Let me know. I'll stop. Ask me the questions you guys want. I'm going fast over here, guys. More so to get to the slides, right? I do want to talk about a few key concepts that is hurting a lot of traders that have been fooled into thinking that, hey, all I have to do is buy and hold on leverage. No, you can't do that. Can't do that. Across Canada, he's doing TA right now. Are we starting a bear market? Cypher B dive RS on. Extreme Critic says go down a couple of percent and everyone gets super bearish. Yeah, that does seem to be the case when pertaining to crypto. But I do want to have I do want to touch on what you just said a little bit over there, Extreme Critic. While you are right that people do tend to overreact when prices go down, you need to understand that, let's say, going down a couple of percent isn't as relevant as breaking a key structure, and we could do that by going down like multiple percent, right? Or we could go down by going down we could do that by just going down a couple of percent. So for example, let's say you have a key level, right? A key level right over here. And price is living all the way over there, right? All the way over here. Well, price could go down like freaking 30%, still respect that level and everything is fine, okay? But on the flip side, if price is living over here and your key level is here, going down a couple of percent is enough to start being like, all right, this is looking really ugly now. So it's not about how much percent you go down, but more so about the structure that is lost on the time frame, right? Because when I say structure, guys, I'm talking about a combination of trend analysis and support and resistance. That's why the word structure to me is a lot more important than saying trend. Yeah, guys, please remember to hit the like. There's 300 of you here and there's only 40 likes. Okay, so that's Bitcoin. Remember, guys, I'm not going to be getting midterm bullish on Bitcoin until we start seeing signs of accumulation. And hey, this may be it, right? If we can maintain this level over here as a higher low, like we postulated 2 days ago, well, now we'll start seeing things go in our thesis direction, right? Remember, you formulate a thesis, you start seeing if that thesis starts being validated, right? The initial signs, and then you can start placing your trade. The earlier you place your trade, the more riskier it is, right? But the more reward, the more confirmation you wait for, well, it's less risky and less reward. But when you're looking for a move, potential reversal move all the way to 60,000, 70,000 even, well, it's worth the wait, guys. It's worth the wait. You don't have to put on long-term positions over here until you start seeing those signs, because your edge towards the upside is huge, right? So what do you do until then? Well, you play the ranges. There was a range trade from 40,000 to the bottom of the range, the middle of the range over here at 36,000. Bitcoin, in my opinion, is sitting in this range between 41,000, top side, middle range 36,000-ish, bottom of the range around 30,000, right? Just keep it simple. All right. Mango Man, should I sell for a loss? This is affecting my health. Okay, we will be talking about that very soon. Ricky Ricardo, remind me to answer your question if I forget to, because this is really important. Selling for a loss. Okay. GMO says, I just want to make sure I don't miss any important questions. Okay, cool. So that's Bitcoin. On the 12-hour, we'll cover Bitcoin. On the daily, we can take a quick look at the weekly as well. And this is, okay, so this is what we're going to be talking about, right? I was initially going to do a presentation. I got exposed. Damn it. I was going to do a presentation right over here on the charts. I'm like, you know what? Let's put in some effort and put it on the slides. But this is what we're going to be talking about today. Okay, so these levels over here are weekly levels, but again, guys, the weekly isn't looking too good at all, in my opinion. If we close within, honestly, there's a quick trick that we could simply use over here. You could identify your range by just doing this, right? Because we're back within this range. We talked about this yesterday. When pertaining to certain structures breaking towards the upside, seeing continuation, and then if we do come back down to test the structure, we want the structure to hold the level. If we break back into the structure, well, that's a bear sign, and it's not the end until we actually lose the bottom of the structure, but then we're living within that structure again, right? So at the moment, we're living within this structure, right? We're living within that. So our range now is going to be right over here, 32,000 towards the bottom, and towards the upside it is 38,000. Okay, so that is your weekly range that you could be playing right over there. 32,000 towards the bottom and around 38,000 towards the upside. If we close a weekly candle above 38,000, we can look for a move back to 45,000. Until we do that, at least on a weekly time frame basis, I would not be looking for that move. Now, we could see earlier signs of this happening on the, I am being spammed with WhatsApp messages now. Just go ahead and close this. We may see earlier signs of this playing out on the 4-day and the 2-day, and we'll keep an eye out for that. The 4-day is my go-to time frame, but for now, for the purposes of today's analysis, we are looking at the weekly time frame. Let's go ahead and look at the oscillators quickly. Stochastic swinging down. They seem to be resetting over here in the middle of the zone over here around 50ish. Not bad. This doesn't look good at all. We're living underneath 50 yet again. Remember, we use this primarily for trend analysis, and then we look for divergences, right? So trend analysis first, divergences second, etc, etc. And not looking the best over here. We want to start seeing some strength show, and this will start on the lower time frames, then cascade onto the mid, then on over to the higher time frames, right? And I mean, this is neutral over here. There's not much to be said. 12 hour, I think we already took a look at this. If this does cross towards downside while breaking 36,000, I'll be looking for this to come back down, swing towards the lower zone over here again. So yeah, not looking good. Daily is looking, daily has a good picture over here. Daily stochastics and RSI are both looking good. Okay, cool. So that's Bitcoin, guys. That's Bitcoin. Okay, again, I still think that we're in a range, we're in consolidation. It's too early to get bullish on Bitcoin, but we may see those signs soon. Everyone's saying buy the dip. This wasn't the dip that you want to be buying if you're looking for a midterm move at the very least. This was the dip that you want to be buying if you're looking to buy for like years on end, right? So when I bought my Bitcoin over here, I'm buying literally for the next cycle, right? And I was very specific with that when I mentioned to you guys that I'll be buying Bitcoin at these levels, because I'm not bullish on Bitcoin in the midterm at all, at freaking all. I won't be bullish until we start seeing the trend reverse. Okay, so that's Bitcoin. Cardano did something really interesting over the past few days. Do you guys remember what we were talking about pertaining to Cardano? I want to switch on over to the lower time frames for Cardano. All right, guys. Okay. So let's go ahead and talk about Cardano. What are the key levels that we're looking for Cardano to hold? Cardano surprisingly held all of those levels, right? And it retook a interesting level that I did not expect it to retake. And now this is an education session right over here for us, for all of you, and for me too. Well, every time I teach something to you guys, it reinforces those ideas in myself. Okay. So we can switch on over to the 2-day temporarily. Now we are talking about the structure right over here. All right, between $1.43 and towards the underside we have around 95 cents to $1. Cardano, even though it came in and dipped right towards the bottom of that structure, it held the candle close. Contrast that with Bitcoin. We were just talking about a similar structure with Bitcoin in the weekly, right? Bitcoin closed inside the structure and now is living within that structure, right? If Cardano had closed inside this structure here, guys, Cardano would have been ranging between $1.40 and $1, but it closed above. So it's ranging above the structure now, right? So this entire area should be support for Cardano, and we're seeing it being supported. 1 candle, 2 candles, 3 candles, 4 candles now, and perhaps even the 5th candle. We're closing the day in around 17 hours, right? The 2-day candle in 17 hours. Now, the interesting thing for me was whether or not Cardano would hold daily candles, retake this level over here at $1.65 on the daily time frame, and then hold it on the daily time frame leading into the weekly close, right? So again, going to the daily now, I was looking for Cardano to close a daily candle above this level and then hold it leading into this weekly close. We did get the close, we did get the confirmation, but leading into the weekly close, what happens? Well, we break down. Now this is where it gets really interesting. Even though we retook the level, there was no follow through, right? There was no follow through towards the upside. Instead, what we got was a perfect descending triangle, a distribution right above that level. So even though we retook that level, guys, it just ended up being a way for the bigger market players to distribute their positions and to accumulate short positions at the zone, because this was only a daily level. And you guys are seeing an example now of how how market participants will use lower time frame levels to distribute a position, right, for the higher time frame level. So if they were looking to sell on the weekly or the 2-day time frame, they would use the daily, the 12-hour and the 4-hour time frame to distribute on the lower high, right? So over here we just ended up putting a lower high on the daily time frame, unfortunately. So right over here, the lower high, and you can see the distribution on the 4-hour time frame, right? So it would have been great if we closed a weekly above it, but no, we did not do that. The daily ended up being distribution, and you could drill down into the daily time frame and you can see your distribution pattern right over here, right? Lower high, lower high, lower high, breakdown. So what's the measured move now for this? Let's go ahead and check. Well, it's likely going to come back down over here to around $1.45, guys, if it sees the follow through over here. Does that make sense? Are you guys understanding everything I'm saying? We are all over the place today, but this stuff is important. This is where people get to separate themselves from the moon boys and the doom boys, because this is trader's paradise right over here. Hey IJ, how's it going, buddy? How's it going? How's it going? How's it going? Actually, let's check out the oscillators on Cardano. Swinging low, swinging down. Not much to be said over here. We are looking at the 4-hour though, 12-hour, swinging up, not bad. Daily. Weekly has a chance of putting in really strong bullish divergence, so keep an eye out for that. But yeah, a couple of weeks out before confirming that. Do we have I don't think so. I think this is too far away. You could make a case for the potential for bullish divergence to be formulating over here, but I wouldn't yeah, I wouldn't think too much on it. Also, another thing going against Bitcoin, guys, which is going to affect the rest of the USD charts on this market, is Cloud has flipped red, right? Cloud has flipped red as well, so keep an eye. Like, don't be getting too bullish over here just yet. There's no reason to, right? This is the time you guys can use to prepare for the next run, if you do have a next run. It could either be a bear run or it could be a bull run. Either way, this is a time to focus. This is a time to prepare, to study. Use your time to study. Those of you who are on the C program and were lagging behind on your content, now is the time to start studying and refreshing on concepts that you have forgotten. Don't waste this time, all right? Don't waste this time, because you can prepare for the next run. It could be a bull run, it could be a bear run. Either way, there's money to be made. Towards the downside especially, I would be excited for a clear bear trade over here. Why? Because it's easy to make Bitcoin on bear moves. Controlling my FOMO into buying this dip. Well, if you, IJ, if you're looking at this as a higher low, then it's a dip to be buying. So the question is it a higher low? We'll find out more soon. We do have a bullish TK cross, so people are looking for the edge to edge trade over here. I wasn't too I wasn't too keen on that happening just yet, right? There was too much resistance overhead on the mid time frames. If we did have that move, what was that, 44,000? That would end up just being a wick on over to the daily 10K, I bet. There you go, right? It lines up exactly with what we talked about in the beginning of the video, right? Essentially, us closing above the daily 200, best case scenario, but wicking on over to the 10K, right? Which would have been your edge to edge on the 4-hour time frame, and closing underneath the 21 EMA, which would have been somewhere around 43,000. So it all shapes up. Is it safe to say, so AJ asks a good question, is it safe to say that most of the altcoins that pumped this week just became distribution zones? I'm looking at the ones like Matic. Let's go ahead and check on Matic. I think Matic put in a new high though, right? No, Matic looks like a dead cat bounce over here. Matic's a difficult one because it did have a very strong bounce, but yeah, no, if it did break above $2.47, then I would have said nope, Matic's looking great. But you could be right, this could just end up being a dead cat bounce and then continuation. Bitcoin is not a dead cat bounce. Bitcoin looks more like a potential distribution, right, on its most bearish case, and on its most bullish case, potential accumulation. The bear season also sounds like a good time to conduct an account check on all personal assets. Yeah, it's a good time to just organize yourself mentally as well, right? Get your shit together, guys. Right? Everyone who thought that they were geniuses during the bull run are now having some reality checks, and that's fine. We all go through that. But now is the time to not let that put you down, right? Just understand that was the cost of having your first crypto experience, or even traditional markets for that matter, right? It could happen there too, but crypto's a little bit crazier, like you guys saw. And now it's time to reevaluate how you want to move forward. There's a lot of opportunity in this market, a lot of opportunity. Josh Burke says we won't go below 32,000. This is the accumulation. Perhaps, man, perhaps. Please slow down, says Ali Sabra. I apologize, man. Am I talking too fast? I really do apologize. I'm speaking so fast that I can't keep up. I'm thinking so fast that my mouth can't keep up with my thoughts, I guess. It's something I've been trying to work on for a while, where I don't speak as fast as I do. All right, something I do want to take a quick look at before we switch on over to the slides, guys, is the Mango dashboard. The Mango dashboard has been freaking nailing it recently, and this is a tad bit too big. Okay. Yeah. Okay. So right over there. Bitcoin, it did call the shot 15 days ago. You're up 30%. On BNB, you're up 50%. On XRP, you're up 20%. So I do want to mention something on the XRP videos we've been doing. Every time we do post a XRP video, for some reason YouTube takes it down immediately, because I think some XRP community member has initiated a bot that reports the video over and over and over again, like in a split second. So then YouTube needs to go in and then reactivate the video. And then I'm noticing there's a lot of like emotion in the comments on XRP. If we ever give a remotely bearish opinion on XRP, Krisha tends to get like completely trashed in the comments. And you guys need to understand that pertaining to XRP or any altcoin, right? We are traders at the end of the day, and markets go up and markets go down. There's opportunity in any direction. You guys can't get emotional if we have an opposing view. And if we do have an opposing view, why even bother coming to check and watch the channel if you know, if you guys aren't interested in any views but bullish views? Just, you know, just trade in that direction, the bullish direction. There's no reason to come and listen to us in that regard. Okay, so on the dashboard, things Matic has switched neutral on the daily as well. When did it switch? Actually 5 days ago. Okay, so 12-hour. Matic is still long on the 12-hour time frame. Actually, in fact, it switched long 2 days ago. I'll be interested to see how this plays out. Actually already down 19%. There you go. On the 4-hour time frame, everything's neutral. Everything's neutral for the most part. We do have a few longs against Bitcoin. We'll see a few more longs. Yep. So all coins are still outperforming Bitcoin for the most part, which is really interesting. Really interesting. Someone did mention that on the hot list we were seeing some really interesting So engine, Krisha found engine on the hot list over here. This is one of the new features that we introduced a few days ago. I think it was just 2 days ago actually, and it's already up 24% since then. There was another one, right, Mark? It was Unfi, something like that, UNFI. So that one's doing really well as well. It did really well, and then I think it reversed. So we go on over to the chart quickly. Mainland media says, stop asking for buys or sells when this guy's giving knowledge. You guys have no excuse. You have the internet. Take accountability, or give your money to charity. Well said, buddy. Well freaking said. Give this guy some mangoes. Alright, so I'm going to take a few questions now before we move on over to the slides. I do want to take questions in regards to like more foundational trading, right? I won't be looking at any charts. I want you guys to ask me questions in regards to either trade management or risk management, because we will be touching on that when we go on over to the slides, and it'll be a lot more interactive if you guys do have questions as well. Yeah, a lot of these things are switching to neutral, and from long to neutral as well, by the way. Hey Mystery Mask, how's it going, buddy? Good to see you in here. Sean, do you pay attention to DXY? No, I don't pay attention to DXY as much as I pay attention to the bond market, the yields. So again, AJ, you see that bouncing, and what happens to the markets? Tan Swan's like, at Mainland Media, give basket of mangoes. That's awesome. Altcoins may also outperform Bitcoin towards the downside. They always do. They usually do. Until we see different, we'll assume that they do, right? We are trend traders at the end of the day. Santiago Adams says, Sean, what's your immediate targets for Bitcoin? I talked about that for a good 15-20 minutes, man. Julian Patrick says, your pace is fine to me, but that's coming from me who speaks very fast too. Dude, you speak my language then, Julian. You're the kind of guy I want to have a beer with. We'd have fun. Ali Saber says, can you please update the Bitcoin chart? I've been talking about Bitcoin for like a good 25 minutes, guys. What's going on? Are you guys even listening to the stream? It's making me wonder if I should do the slides, because I'll just waste my breath. Why are the whales sending to the exchanges? We just had a huge bounce at 30,000. Whales are gonna want to sell because they don't care whether they sell at this price or 60,000 or 90,000. They're still selling only a small. They're still selling only a small portion of their funds compared to even though it's a large amount, right? When it does hit the exchanges, compared to how much they actually do have, it's nothing, right? So whales usually sell throughout the bull market, by the way, right, on the way towards the upside. That's what they did in the last market as well. a lot of the whales aren't like experienced traders, man. They're just they bought during like 2012, 2013, and they have a shitloads, and they've been holding since then. They don't care. People think that every whale out there is like this genius trader who knows exactly what he's doing. It's not how it works. Okay, Santiago, I see now. You can rewatch the beginning part of the stream. So it's not feasible for me to redo the analysis for every new person who enters, right? But you can rewind. DJ82 says, talk about risk management, where or how to begin a risk management setup before entering a trade. So I wish I could do a entire lecture just on risk management and cover everything I need to cover, but that would take me a good 6 hours, maybe even more. Like the seed module alone is 5.5 hours, and that's after me editing out a lot of the material, right? It's 5.5 hours after the edits. Okay, cool. So I do want to switch on over to the charts now. We are currently looking at the dashboard, so let me switch on. You know what, I'm just gonna go ahead and refresh my drink really quickly, guys. I'll be back in just a minute. Give me a second. Just give me a sec. All right, I'm back, and let's switch on over to the Google Slides right over here. All right, cool. So this is a really impromptu presentation that I put together literally 10 minutes before starting the stream. So expect no organization whatsoever, but whatever, right? It is the Mango way. We will be touching on some key concepts, some key ideas that I've already gone over a few times, but it's not going to be a contained presentation. It's not like we're going to be talking about only this, right? We'll be talking about this as a starter, and then we'll take questions and we can expand on everything that we've discussed. Now, if you guys are on the C program, some of these concepts you may already be familiar with. In fact, you guys may have a far deeper understanding of all of this. In fact, you guys do. But it'll be a good rehash for all of you either way. Now, for those of you who are not in the C program and are regular YouTube viewers, this is going to be highly beneficial for all of you. All right, so let's switch on over to the outline really quick. Okay, so three things I do want to talk about, okay, as a starter at the very least. We're going to be talking about understand what you control, okay, understand what you can control in the markets, what you actually have control over, understanding your edge, okay? And then the combination of the two, how your risk and your edge will derive your potential, okay? Cool. So let's start with this. Understand what you control. What exactly do I mean by this, right? We've talked about this over the past few weeks when people talk about trying to optimize their gains, right? And let me switch on over to the comments so I can read your chat as well, your questions, if you guys do have any. Where is it? I seem to have lost it. Oh, nope, right over here. Bring this over here to this window. Oh, damn, you guys don't see. Damn it, I messed with the screen. So it's a good thing. It's a good thing I switched to the chat. Okay, hold up. All right, there we go. There always has to be a flop, eh? In every stream, I always have to make some mistake. All right, let me just adjust my hair as well. All right, that's good enough. It's good enough. Okay, so again, I put the stream together really these slides together really quickly. It's an impromptu stream. I've not impromptu presentation, Jesus Christ. I've not really put too much thought into it. It's just key points that I do want to touch on, that we have been touching on frequently over the past few weeks, but we can expand on that today, right? So, three things I do want to talk about. Again, understand what you can control, understand your edge, and how you can put that together to get better trades and get better trades for the future, like over a long period of time, to be consistent over a long period of time. So, the first thing, understand what you control. What do I mean by that, right? We talk about this often, but I don't think people fully have internalized that just yet. So when I say that all you can control is your risk, it really means just that. Everything else in the markets, guys, everything else that happens on the charts, right? Everything, I'm going to switch on to the charts really quickly, right? Bitcoin dumping, Bitcoin pumping, everything, right? Whether you take a long trade, whether you take a short trade, all you can control is your risk. After that, everything that happens is not because you are a genius and you knew that it was going to happen. Okay, that was the market doing it. That was the market doing it. You have no control over that unless you are one of the big market players that can actually put in buying power to make it happen, to make price go up to those levels, right? And we call those guys the market operators, right? Those aren't market makers, by the way. Those are the people that I refer to as market operators. They can actually operate price in a way to get what they want out of the market. We do not fall into that category. All we can do is control our risk. After that, everything else is a consequence of what the market is doing. Okay, so when you win, right, it's not you winning. You just put yourself in a position and the market won. When you put yourself in a losing position, or rather when you put yourself in a short trade and the market loses, you just put yourself in that position and the market did the rest. All you can do, every time you put on a trade, you need to internalize this. You need to internalize this because that's the only thing that you are in control of, and that is your risk. Okay, that is your risk. Period. Once you internalize this, guys, you will put on every single trade through a risk first approach, because that's the only thing you can control. And holy, I hate the song. Let me just switch on over this tune. Switch on over to the other. All right, cool. So again, your risk is the only thing you can control. Okay, where you get invalidated, how much you lose, that's what you are always concerned about. when you are putting on a trade, you need to ask yourself, okay, cool, how much am I willing to lose on this trade? Where am I losing on this trade, right? Where am I wrong on this trade? And if I do lose on this trade, and this brings us to our next one, if I do lose on this trade, does it let me put on the next trade, and the next trade, and the next trade, and the next trade, right? So again, if you win, you didn't do anything other than let it happen. If you lose, you only lose. Okay, that's another thing I do want to talk about. That's another thing I do want to talk about. Okay, let me type it here. This is something that seed members understand. Let's say you decide, if I lose on this trade, I am allowed to lose $1,000. Okay, if the market actually comes down and invalidates you on your trade, and you lost $1,000, right? You take a loss of $1,000. You did not really lose $1,000. Okay, not through a trader's perspective. Not if you're looking at this through a proper trading perspective. You have only really lost on that trade if you lose more than 1,000. If you lose more than 1,000, then you've lost on that trade. And now you might be asking, wait, what do you mean? This is so confusing. The reason for that is because as soon as you initiate the trade, right, and you have accepted, okay, you have already planned / accepted a $1,000 loss on that trade, potential loss on that trade, right? You have said, hey, if Bitcoin breaks underneath $40,000, I'm going to be getting out of my trade, and I will lose $1,000 on that trade. Once you said that, you've accepted $1,000 as a potential loss in that trade, correct? That is your risk limit, right? You need to start looking at that number now, guys, as your cost of doing business. That is your cost to put on the trade to begin with, right? If you are saying, hey, Bitcoin could go up potential target to Bitcoin, Cardano, whatever, right, to $100,000. Okay, now you're essentially saying this: for me to be part of this trade, for me to be part of this movement of Bitcoin from 50,000 all the way to 100,000, I am paying $1,000 to be part of the trade. This is a business, right? This costs me something. When you are running any business, when you start any entrepreneurship venture, you got to put up some upfront costs, right? And you know those costs. You know how much you're paying your employees. You know how much you're paying for rent, etc., etc., etc. Well, this is the cost for this trade. If you want to be part of this trade, right, to $100,000, you got to put up $1,000. Now, if you somehow manage to lose more than this, that is your real loss. That's your loss, not anything more than that. All right, not anything underneath that. Okay, so if you end up losing $4,000, that's your loss. That's you losing, because you've lost 3,000 then. Okay, you've lost 3,000 because 1,000 was part of you doing business. That was the ticket you paid. But if you let your trade actually come down and allow you to lose more, that's when you lose, guys. A lot of people ask me why I'm so stress-free, why I can take losses the way I do, blah, blah, blah. It's because of this. Because as soon as I put on my trade, I have accepted a loss. Anything other than that is a win, right? Anything other than that. I only lose really if I violate my rules and my risk management actually... do you guys hear me, by the way? I hope you guys can hear me. Because okay, I think you guys can hear me. Okay, so this is really, really important to understand, okay? If you have said, I'm going to lose $1,000, right? You only really, really take a loss, guys, if you lose more than that. Because $1,000 is the price you pay to be part of the trade. Now, this gets me to my next point. The next thing you can control is how long do you survive. Okay, but before I go on over to that, let me see if you guys have any questions. there is a delay on the chat, so all right, okay. Seems like no one has any questions. Everybody understands everything, which is freaking great. Okay, so now the next thing that you can control, right, is how long you survive in the actual markets, right? So let's say that you have a stash of $10,000, okay, $10,000, and we go back to our previous example where you've allowed yourself to lose $1,000. Well, what does that mean? How many trades can you put on? How many trades can you put on if you've allowed yourself to lose $1,000 on your trade, right? And you have only $10,000 to trade with. I'll wait for you guys to respond. The simple math, like you guys should be able to answer this question. Exactly 10, right? There's a delay, so it takes me a bit to see your. Okay, so you guys can lose only 10 times before you're freaking wiped out. Okay, so and each time, right, your account is withering down, withering down. So that's essentially you putting on 10% of your entire portfolio at risk. Okay, that's another key thing to understand. You're putting 10% of your entire portfolio at risk. That doesn't mean, right, that you're putting only a $1,000 trade on. Remember this. When we say, oh, you're risking $1,000, a lot of people think that you're putting on $1,000 into that position. That's not what it means. What it means is that you will lose $1,000 when you exit from the trade. Think about this, guys. Everything boils down to you already knowing your risk parameters before getting into the trade. It always starts with risk. Always starts with where you're wrong, right? Risk comes from where you're wrong about your trade. That's why it's so important at Mango for us to be champion losers. We champion losing, so that way when we do win, it just happens automatically and happens in a grand way. But we perfect our losing because that's the only thing we can control. Okay, so going back to this, you can lose only 10 times. So you now need a strategy. Okay, if you have $10,000, you need a strategy to make sure that you don't get wiped out before you go into profitability, because you're not going to win every single trade. Okay, you know, out of 10 trades, right? Let's say I'm going to do 10, 10, 10, 10, 10. Is this 10? 1, 2, 3, 4, 5, 6, 7, 8, 9, and we can do 1. Out of 10 trades over here, you're not going to win every single one of these. Okay, the first one may be a loss. Let's go ahead and turn it red. The second one may be a loss. The third one may be a loss, right? So you don't know when your wins will actually come, because remember, we cannot control when we win, right? All we can control is our strategy over a long period of time. So you need to put on a strategy to ensure that you don't have risk of ruin, essentially losing your account. If you have only $10,000 and you're giving yourself only 10 trades before you actually come into profitability. And this is not even you coming into profitability. This is you winning a trade. All right. This is you winning a trade. You're essentially saying that, hey, there's no way. All right. There's no way that I'm going to lose 10 trades in a row. And by the way, that could freaking happen. Okay. That could very well happen. As good of a trader as you are, you will see a really, really horrible streak one day of just losses after losses, because the market conditions are just not conducive to your style of trading. It's going to happen to the best of you, to the best of us, right? So keep this in mind, that if you only have $10,000 and you're putting on 1,000 at risk, you only have 10 trades. This possibility of having 10 trades hit you in a row of losers could happen. Okay. More importantly, understand that each time that you do lose, right? Each time you do lose, your portfolio is going down and down and down, right? You've withered it down to 5,000. So let's say you get a win after that. Okay, now this is the next thing that you need to understand. Okay, this boils down to this again. Okay, this is a trend trading concept. Each time you take a loss, right? Let's say you had 10,000 and you've now come down to, from 10,000, you've gone all the way down to around 6,000. If you win on your next trade and all your win gives you is a $100 win or $200 win, right? Something really, really small. Is it even enough? Is it even enough to make up for your losses? And is it enough to keep you in the game? That's the key thing. Is it enough to keep you in the game for another run of 10 trades, right? Which is why I always talk about this idea of win magnitude and win rate. They both matter. People think that all that matters is your win rate, right? That's why they keep asking, oh, what's your win rate? What's your win rate? What's your win rate? Your win rate isn't as important as your win magnitude in conjunction with your win rate, guys. Okay? Because when I say win magnitude, I'm talking about the amount you win. Because let's say I lose, guys, let's say I've set up my trading strategy in a way where I lose 9 trades in a row, right? And then on that final trade, when I do win, right? When I do win, I end up winning $100,000. What if my trading strategy is that? Where I am okay with only a 10% win rate, right? I'm okay with only a 10% win rate. But when I do win, I win like this. Am I a good trader or am I a bad trader? Okay, I've lost 90% of my trades. Am I a good trader or am I a bad trader if my trading strategy was successful and I nailed that win? Ruben Sarayan says that sounds savage. $100,000 win, dude. These are the kind of wins that are possible in a grand in a grand way in crypto, right? You can trade for these big trend trades, but but before you get those wins, you're gonna have to endure some pain. Okay, it's not gonna happen like this. Crypto is really generous that way, by the way, where you don't have to deal with this BS. But you do have to deal with some, right? I may take 4 losses in a row before I catch 1 big winner or 2 big winners in a row, which is what we had recently, right? Bitcoin chopped us out a couple of trades, and then we got 2 huge wins, right? And it happens so frequently now where the losses don't even faze me a tad bit. But you need to sit through the initial phase of sitting through your strategy. If you let yourself die out on your first trade and you don't give yourself enough time to sit through your strategy, you do not give yourself enough time to survive. So how you control your risk, how much you're losing on your invalidation, allows you to control how long you survive the game to be part of the wins when they do come. Because you do not know when the wins will come. You never know. You never know. Okay? All you can control is, I just want to survive long enough to be part of the wins. And by the way, guys, like, understand that you can never, ever, ever have a strategy that only allows you to have 10 trades before you have risk of ruin. Okay, you cannot do that. No, you cannot do that, because there will be a run where you do lose, and you have to take into consideration that your emotions are going to come into play. There's a lot of market factors that may sometimes, by the way, have slippage and liquidity issues that force you into a loss more than $1,000 that will account for 2 or 3 trades worth of losses, right? All of these things come into play. So you cannot be risking 10% of your account per trade. You can get away with 5%, in my opinion, but even then, I would say 3 to 5% is the max. Does that make sense, guys? Okay, and I'm really dumbing it down over here. This is a really dumbed out explanation of what we are talking about. Okay, I'm going back to the chat now. Julian Patrick says yes, if you have a big enough win magnitude, yes, and that's what we trade over here, right? That's an element to trading that people tend to forget, that the win magnitude is really key in when pertaining to your long-term success, because you need your big wins to pay for your losses, man. You need your big wins to pay for your losses and the chops. From my perspective as a poker player, you are not a good trader. Okay, thank you for that, Enis. I appreciate that comment. You can find another channel, and you can leave, hit the X button, hit the unsubscribe button, hit the dislike button on your way out as well. Cool. Let me read the rest of the comments. Makes sense. Can you give an example? So so what do you mean by example? Do you mean example of how you would do this? So firstly, you would not want to put on $1,000 risk if you have only $10,000, right? The reason I started with this is to show you guys what you should not be doing. You should not be doing this. For example, you should only, if you have $100,000, can you actually get away with this? Because this gives you 100 trades before you have ruin, right? Now, to some of you, you guys might be saying 100 trades is a bit too much, blah blah blah. Well, then in that case, increase your risk to 2%, right? And then 2,000, right? Then you have 50 trades before you have risk of ruin. So you should, a good example would be $100,000 account, right? Which is why you'd hear a lot of people in the traditional market say that you need a minimum of $100,000 before you start trading. In crypto, I think you can get away with $20,000, right? Maybe 50, right? So is that what you mean by example? Okay, cool. So again, to summarize this concept over here, summarize this concept over here, all you can control is how much you lose per trade. Okay, all you can control is how much you lose per trade, and with that, you automatically need to start considering, if I do lose this much amount, right? Let's say you set $1,000. Well, if you only have $10,000, you're allowing yourself to lose only 10 trades. Right, which is, in my opinion, not feasible. Okay, so then you need to be like, okay, I cannot lose $1,000. No matter how greedy I want to be on this trade, I cannot lose $10,000. I cannot lose $1,000 because all I have is $10,000. So then you have to reduce it to perhaps $100 or perhaps $200, right? Something that allows you to survive long enough in the market to see your strategy through, because you will not win every single trade, and you don't know that. If you do start trading right now, you may start off with a losing streak. It could happen, right? And that may honestly be the best thing that could happen to a trader, as long as you control your risk. Okay, cool. The next point I want to talk about is understanding your edge, but I do want to take a sip of water before that. Sean, I did not say that you are not a good trader. I've said that in the contest that you meant that the person, okay, you meant hype. Okay, I see what you, okay. Okay, I misunderstood. AJ Smalls, okay. What about my message on stop loss and don't abuse leverage? Okay, we can talk about stop losses too really quickly. Actually, you know what, in this section we can talk about stop losses. Thank you, Jason. Yeah, I did need a sip of water. AJ Small says I start off with a major losing streak in a bull market. Yeah, well, we probably learned a lot from it though, right? Okay, so the next concept that I do want to touch on, and this is really important, especially for a lot of you guys who are new to the crypto space and trading long-term and fundamental analysis, etc. Understand your edge and understand it in a deep way, right? Understand in what conditions will you win and in what conditions you will lose. So when we say edge, right, people talk about edge and they think that edge means win, right? I have edge means I win. No, edge just means that you have a probability of winning over the rest of the market participants, right? Your edge is not a certainty. It just gives you an edge over the rest of the market, okay? Whether it be technical analysis or fundamental analysis, your edge is never, ever, ever certain, okay? That's the first thing you need to understand. Because even if you are right, okay, even if you are right, the market is righter, right? That's a phrase I like to use with Krusha. The market is righter, right? Essentially, you're wrong. Essentially, you're wrong because the market is always right. Then you need to understand whether your edge is stemming from pure technical analysis, or is it stemming from pure fundamental analysis, or is it a combination of both? Some people trade pure TA, right? Some people trade pure FA. Some people use a combination of both. And then there's some people like me who use a hybrid approach of saying technical analysis is fundamental analysis on a foundational level of human behavior and behavioral economics, right? That's the approach I take, and that's my edge, right? That's me understanding my foundational edge. And on top of that, right, now you drill down, right? You understand the layers on top of your platform, right? Let's say your platform is fundamental analysis or technical analysis. Start layering on top of that and be like, okay, cool. Now, on top of my technical analysis, I understand my Ichimoku edge. I understand where I'm deriving edge on my Ichimoku indicator, right? I'm looking for this and this and this and this, and if all of these conditions meet, that's my edge. That's where I have an edge of beating the market and actually deriving profits out of the market. It's really important to have and understand your edge and play your edge within that layer, right? So if I take a trade and it's based on the Ichimoku setup on the 12-hour time frame on so-and-so conditions, right? And it's on Bitcoin, where I also have a fundamental, let's say, edge or analysis or hypothesis. I am not going to mix the two, right? I am not going to say, hey, you know what? This is not working out. My 12-hour Ichimoku trade is not working out. But you know what? I believe in Bitcoin long-term. So I'm just going to hold on to this trade, and I'm just going to let go down and down and down and down and down and down on me. And if I'm on leverage, I'm going to be losing all my money because I'm getting wiped out. That is dumb. Don't do that. If you are trading your edge, isolate your entire trade to that edge. Once your edge is wrong, once you are wrong on that trade, exit. All right. This goes back to our previous topic where we're talking about understanding your risk and understanding what you can control. This is where you can control how much you lose. Okay, do not mix your long-term views with your short-term views, in other words. So If your edge is indicators, trade those indicators. Trade that and that alone. If your edge is market dynamics and market structure, so for example, today in the morning, Travis in the seed program, he now has new edge because of new information that was provided to him. He just finished the module on institutional order flow. Let me just go ahead and read his message. He says, "Sure, no, that's not it." He's like, "Good morning, Team Mango. I'm halfway through module 7, institutional order flow, and I will never look at wicks in the same light. It has been a mind-opening experience." So now this actually leads us to our next criteria of edge, which actually ties into fundamental analysis, and this is my views as to why I think fundamental and technical analysis have overlap. You could have edge purely based on market asymmetry, knowledge asymmetry, right? You may know more about something that the rest of the market doesn't know yet. You guys understand what I mean by that? Knowledge asymmetry. Okay, you may know something that the rest of the market does not know. Okay, for example, you may know that Bitcoin is way stronger in its foundational fundamentals than anyone in the world understands yet. You may have like this whoa moment where you understand something and nobody else understands, or very few people understand, and you can take on a very strong probability trade just on that, right? Or you may find a bug in the Bitcoin code that nobody else knows yet, but will soon find out. So, or maybe they do, maybe they don't, right? That's where we have that uncertainty. But that's your edge, right? That's information asymmetry. Now, Travis over here understands something about the markets that other people don't understand. And before he watched that module, he didn't understand that, and he was losing because of that, right? Because the rest of the market participants had that edge over him, and they were taking advantage of that, information asymmetry. So your edge may stem from technical analysis indicators, may stem from fundamental analysis of you understanding things that other people don't, or it could be a combination of both, which is how I trade. And sometimes your edge could be something as simple as, you know what, I'm going to outpatience the market. I'm going to outdiscipline the market. That is edge, guys. That is edge. You combine various aspects of edge together to have a stronger edge on the market. There's something that Will Smith once said in an interview that stuck with me for freaking a decade. I believe it was, he said that I may not be as talented as so-and-so person, but if I will bet my life on the fact that I will outwork him. If we both get onto a treadmill together, I am either dying on that treadmill or he is getting off that treadmill before me. He said that, and it stuck with me. He's like, I am either going to die on that treadmill or he's going to get off that treadmill before me. He was essentially saying that he was going to outwork everyone else to achieve his goals. Now, what I'm telling you guys over here is that you guys can out-discipline everyone with your rules, with your risk control, with understanding your edge, and outperform the rest of the market. Just out-discipline everyone, right? That's something I try to do, right? I try to embody that. I will out-discipline the rest of the market, and that's what I'll get paid for. President L says, brother, thank you so much for sharing your risk management approach. I will adopt it from now on. It's a stress-free strategy. Thank you again, and greetings from Mexico. Yeah, I did want to put this out there for people who actually do want to learn, as opposed to just, gambling. This is important. For those of you who are now here after the dump, after everything, who are still here, you guys are the people who are actually looking to learn. Alright, now final, I wish I could talk on all of this a lot more, guys, but we're already 1 hour and 30 minutes in on the stream. And the last topic of discussion, this is a quick note. This is just a quick note. Risk plus edge, right? Now we've talked about how we need to control our risk, right? That's the only thing we can control. So we need to control that. Everything else is just a consequence of the markets doing market stuff. Edge, again, does not mean certainty. Nothing is certain. Nothing is certain. Everything is a probability, right? So when we look at a trade setup, we know that there's a probability of it playing out, but we can take it one step further. And when we are doing our TA as well, and I'm going to switch on over to the charts now for this. Okay, this is something that you guys got to internalize, right, and have this as a mental note all the time. Let me just, I can't find my freaking, here we go. Let's say you're marking a support line, or let's say you're finding divergence, or let's say you're looking for this to be a higher low, and that is part of your thesis. You need to embed in your vocabulary while putting on your trade, in your mind at the very least, right? In your mind at the very least, the word potential. Okay, so in your mind while you're putting on your trade. So, for example, let's say I'm looking for a higher low over here, and I put on the trade and I tell Kush, hey Kush, I just put on a trade for Bitcoin. I'm looking for this to be a potential higher low. It comes out of my vocabulary automatically now. I'll say potential higher low, or potential playthrough of bullish divergence, potential rejection and playthrough of bearish divergence, potential. It only has a potential of playing out. This is more of you brainwashing your mindset to knowing that your trade may not work out, that you may be wrong on your trade. That reinforces the idea that wait a minute, if it's only a potential high low, have I set my risk parameters correctly? Am I okay losing the amount I'm about to lose on this trade if it goes wrong, right? If it is potential, if it's only potentially a high low, if it's only potentially a reversal, if it's only potentially a support line, even a support line, by the way, could only potentially be support. It could break, right? It could plow through. We saw that. What happened to the weekly 21 EMA, guys? What happened to that? Right there, right? This potential, right? Potential support. It didn't end up being support. Plowed right through it, right? So once you understand that everything has a probability, right? Even your edge has a probability of playing through, and you consider your risk. You'll put everything together and understand that, hey, you know what? Potential is what leads to overall trade success, not certainty. Nothing is certain. It's only the potential of things working out that in the long run will lead to you being successful as a trader, right? And that's when you understand that all you can control is your risk, all you can control is how much you lose, and everything else, all your profits are just luck. Lindika Zondo says, thank you for the wisdom, Sean. We truly appreciate it. I do apologize because I thank you for the kind words, but I wish I could do a better job. This is one of my first impromptu presentations I've ever done. This is how I'm challenging myself now. I think I talked to you guys about how I like to challenge myself doing something uncomfortable. The first thing I ever challenged myself with this year was doing these streams, right? Especially doing them on camera. Like I'm an introvert, I'm not an extrovert. These social situations actually exhaust me, and etc, etc. Now the next thing I'm trying to challenge myself with is doing these impromptu presentations. So I didn't do as well as I would have liked to, but I'm hoping to improve over long term. Don't the CME contracts expire today? What are your thoughts on price moving to max pain, which is at $52,000? It's not gonna. So the move, by the way, is already played out. Contract. So no trader in his right mind, right? If you're actually trading the options market and you know what you're doing, you're not going to be closing out your contracts. You're not going to be managing your positions or rolling those positions out or closing out those positions on the freaking day of expiration. Nobody does that. Nobody does that. All of it is done. All of these trades are managed like at least 2 days before, right? Like you're not going to be waiting, and that's like, even that is a bit irresponsible in my opinion, but I'm really conservative. You'd want to do it like 3 to 4 days prior. You start rolling out those contracts onto the next month, the next expiration, depending on the time frame you're trading, right? So whatever move that was supposed to happen, Ajay, has already happened, right? So it's not going to happen now. Jim Beam says, what is the lowest level Bitcoin could wick to and you'd still believe the bullish accumulation scenario is in play? I'm not... Bitcoin could wick really low for me to... though a wick would not be enough, Jim. I'd be looking for a candle close, man. If we start closing candles underneath, we could wick all... How about this? We could wick all the way down to 29,000. And it wouldn't matter to me. But if we close a single candle underneath 34,000, I'd look for this to break down more. So if we close, okay, so let's put it this way. First candle close underneath this level, and then we'll probably range over here, and then we close a candle underneath 30,000. We're coming down to probably 25,000. 25,000. But again, too early to say. Need more information. Alright, back on over to the comments over here. And Dan J Skipper says, I always share your content and push noobs to Mango. Hey man, appreciate that. Thank you very much, Dan. And so they actually learn techniques and psychology behind this. You've definitely helped me, and still cheers, Mango. Thank you, man. Appreciate those kind words. Garima says, great stream. I hope this was a great stream. I tried to do something a bit different today, because I'm hoping that this will help you guys manage your risk a bit more. Anis asks, is it taking this into consideration, normal to trade with up to 2% of your portfolio? Is that overly cautious? I think that's what you mean. This comes from my times as a poker pro. 2% to 3% is what I recommend, man. I'm really conservative. And again, Anis, you need to understand that when you say 2% or 3%, doesn't mean that that's what you're putting in, right? Like, as a poker player, you're putting in chips, and you end up when you lose your hand, right? And when you lose your hand, you lose your chips, right? You lose all the chips that you put in. That's not what that's not what it entails with trading, right? Because when you put in money in the market, you only lose how much the difference between what you pull out and how much you put in. You don't lose it all. You shouldn't lose it all, at the very least. Tan Swan says, great stream with valuable lessons for the public. Yeah, Tan, a lot of these lessons over here are probably I wouldn't say redundant, but just rehashes for you guys in the C program, right? Anis says, Sean, are you aware that you are the only one giving this free education? I don't know what other YouTubers are doing, but most other YouTubers probably aren't really putting on these kind of trades though, right? Yep. a lot of the and not to disparage them in any way, I think they buy and hold through the bull market, right? They like buy a bunch of altcoins and they'll hold it through the bull market. That's not how I trade. Matic. We looked at Matic the beginning of the stream. Got rejected at its candle close highs, unfortunately. The weekly may close well though. Yeah, it got rejected over here. The weekly may salvage itself as long as the weekly closes about $1.74. I'll still be bullish on this. In fact, this will look freaking fantastic if the weekly closes above $1.74. But the daily over here is looking like it wants to. Let's see. This was our region of support that we were looking for to hold, right? $1.82. It's holding it, but if it breaks down underneath there, it's not looking good at the moment. But if it breaks down underneath over there, I'll be looking at $1.55, perhaps all the way down to 88 cents later. Sean, BTC USD daily 50 SMA 200 moving average bearish cross coming. I don't look at those SMA crosses, man. Like, the market's already done most of its bearish move way after those death crosses have happened. And then people will do this, you know. I'll show you what people will do. Oh my god, it's so this shit pisses me off the most. Let's find BLX. All? Where the hell? Where is it? Oh, it's Jesus Christ! It's right on the top, and I missed it. Let's hide all of this. We can turn on the mango ribbon, I guess, for that, right? And I have two MAs over here, so we can change this one to 200. So you said 250, right? I don't have any EMA. I don't have another MA though. I think I probably have on the ribbon though. Right over here. Oh, by the way, guys, we did fix the email issues in regards to the mango ribbon. You guys probably will receive the emails that were clogged from like weeks or maybe a month now into your inbox. So reply to that email with your TradingView ID, and I'll go ahead and try to get all of you set up today with your mango ribbon. So you said 250, right? So is it on the daily or the weekly, IJ? I think you said daily. I set this right. 5200 seems right. MA colors are good. Trying to find. The 50 is all the way over here, and the 200's here. Is this? Did I do it right? That doesn't look right. Why is the 50 there? Let's just confirm this. Yeah, the 50 is over there, man. How is this being drawn wrong? So why would it come in the coming days? This is the daily I'm looking at. All right, so let's talk about these crosses, right? Let's talk about these crosses. We're looking for a bear cross, right? 200 moving average, crossing over the underneath the 50 moving average. You're looking for bear crosses where the 50 basically crosses underneath the 200 moving average. So like this move right over here. This one actually got it pretty well, right? You got 50 moving average and you dumped. Damn, that one actually got well over here. Got the move towards the upside, but that's the thing, right? By the time you actually get it, the move is actually already, you got retest, and this doesn't tell you anything, man. It doesn't tell you anything. How long would you stay in this trade? I don't like crosses. I don't like crosses. They're too finicky. Look at this one over here. Especially simple moving averages. If you use crosses on EMAs, that's a lot better. I just talked about Matic, Lakshya. So IJ, the thing about moving averages, especially crosses, all right, moving averages are really good, but looking for crosses, what happens on a moving average cross is that it's so delayed that most of the price action has already played out. It's not really telling you much, and you're in the trade or out of the trade far too late. You want to look at exponential moving averages, or even the Tenki and Kijun is far better, because they will be a lot more aggressive on structural breaks, right? If you watch the Ichimoku module in the C program, we talk about why the Tenki and the Kijun move the way that they do. So it gives you a lot more information and quicker at the right times. Alright guys, I'll be taking a few more questions before we wrap up. I'll let the stream run till around the 2 hour mark. We are at a hour and 49 minutes at the moment, so we have around 11 minutes or so to go. So any more questions, let me know. But no more charts though. Don't want to look at any charts today. I mean, in the stream. I'd like to know why there are huge volume buys on some alts like Bluezell, etc. Are they short liquidations or market buys by some players? Those are volume buys that are relative to the volume on that coin, man. So you can't, like, let's say you see a huge volume spike on Bitcoin, right, like this over here, but you see the same thing on Bluezell. It's relative to its volume that is there on that coin. When you go and look at the actual order book of Bluezell, or did you name anything else, whatever altcoin, right, these low caps, you'll see that it doesn't take much to cause a volume spike. Like, I could go and cause a volume spike right now on Bluezell or anything. Like, there's any one of those small coins, the small, I don't call them shit coins because people get upset, but my point is that those volume spikes, you gotta take them with a grain of salt. Let's go ahead and go Bluezell. What do you type it? BLZ? BDC? What time frame? Daily? So I'll give you an example of when you could see a huge volume spike without price ever doing what it's not something to completely ignore and disregard them, right? But take into consideration the market cap and the amount of relative volume compared to the rest of the coins, right? So the relative volume being traded on that asset compared to the rest of the coins are around its same market cap. Now, let's say I am a big Bluezell bag holder and I've been waiting to get out of this market for a very long time, and for whatever reason now I notice that on the order book there's a huge wall, right? Someone's trying to be cute and trick people into putting in buy orders because they think there's a huge whale who's accumulating. Well, another whale may come in and be like, you know what, screw this guy, and I'm going to sell my entire bag into him, and that's going to cause a volume spike, and then this guy's going to try to pull his bag out ASAP, like his wall out ASAP, but that causes the volume spike, and then suddenly the market dies again. And that could be one explanation. But this is something else that we talk about and see it is like when the market gives you an opportunity to sell or get out or get in, that's when you take the opportunity. Liquidity matters. Don't wait for the market. Don't wait for when you want to get out. get out when the market lets you get out, especially when you have a big position. Shane Walter says you can't really say they are crap because a lot of them outperform BDC, ADA, VeChain, etc. I'm not sure whether you are responding to me or to someone else in the chat. So exactly, Mark. Well, I just explained a situation where we could see big volume without any price movement, right? If I sell into a huge wall that doesn't move, and then he pulls his wall and the price just stays there, and I'm not willing to push the price down any further either, I'll pull my bids either too, right? I'll pull my sell bids, and price does nothing. If you're just coming in, says AJ Smalls, he went over BDC, Cardano, Matic at the beginning of the stream. Then he gave us some awesome presentation on being a trader. Rewind the stream if you're looking for this content. Hey man, AJ, thank you for that. Mark says that last cross you just looked at would have got you out after the dip and just before it went back up. Yeah, like you can't. That's the thing, right, Mark? So you spotted and I didn't even spot it. The thing is, like, when you're looking at the price, let's go back to Bitcoin. When you're looking at the chart and you're looking at the crosses like that, it seems like when you're looking at it from through a top level perspective, the average person will see it as, oh wow, it worked, or oh wow, it worked. Unless it's only until you actually try to trade it and you put your cursor above it and you realize that, wait a minute, I was selling at the bottom, right? And then price moves away without me, or vice versa, where you buy at the top and price dumps. So you don't really see it until you actually go into it, and then you see a lot of traders on YouTube show it to their YouTube viewers, and they'll be like, see, so and so cross, or see, and then they'll go back through the history, right? And they'll do this. They'll be like, so and so percent, and so and so percent, and so and so percent, and everyone's like, wow. I mean, again, I don't want to disparage anyone. What do I know, man? Maybe I'm wrong on this, honestly. Again, we just talked about how nothing's we don't know anything for certain. And I'm being a bit arrogant right now, so I do apologize. I've just been through the entire point of Mango is to make sure you guys don't go through the pain that Krisha and I went through, right? So there might be a lot that we say that is too cautious, and we might be missing a lot, right? We take a very conservative approach. bulls are pretty weak. We might retest 30k if you fall down below 36k is what you mean, right, KM? I agree. That's what we discussed in the beginning of the stream. No, I lost that after that loss I took. Okay, so I haven't I was supposed to give you guys an overview, a recap on my short trade on ETH BTC, right? Damn, this shot's a mess. So I essentially took 3 shots on ETH. I won 2, lost 1. This is an example, right, of how you don't concern yourself with winning every single trade, right? You just keep taking every single trade until you're invalidated, and then you move on to the next opportunity, right? Sometimes your trade strategy might be invalidated too, right? Your idea of the context of the environment might be invalidated, and I got invalidated over here as soon as Ethereum closed these 12-hour candles. I was trading around the 12-hour time frame. This 12-hour candle over here. So let's do a recap on the trades. We first shorted Ethereum all the way down to over here. We closed that trade. Then we took another short in this region over here, right? And this time around, we posted on the seed, and I believe in the Grove as well, saying that, hey, Ethereum's sitting on lower time frame support. I'll be closing my short over here. Not the entire position. Okay, I did not close the entire thing. I closed only a partial position. I let the rest ride, and I was actually looking to re-add to my position, and I'm not sure if I did or not. And if I did, it was probably a small position that I did add, because I was just trading this fluidly, looking for this to be a low high and then price come down, but it did not, right? What it instead did was, yeah, I did add to my position somewhere around here, I believe, right? When it came in, I was looking for this and a breakdown, right? So I did look to add over here, but instead what happened was we saw this, right? I believe it was that part of the, yeah, it was right over there. So oops, I meant to undo this. Let me undo it over here. Okay, let's go back here. So when you see a candle like this, right, that's invalidation right over there, man. So the wick, us taking out the wick alone over here, the wick high, was good enough invalidation. But what do? We put in a higher candle close on the 12-hour time frame, and we took out these wicks too out of that, right, at around 0.070849. So I just took the loss, closed out the trade, and now I'll only be interested again shorting at BTC underneath this level. Other than that though, Mark, this is a long towards the upside. Now what I'm interested in doing is actually looking at Bitcoin dominance, and I'll be keeping a keen eye on this. So Bitcoin dominance on the day time frame, I'm not trusting the candle close as much, because again, this is an aggregate. It's more of an index, so to speak. It's not a clear read. But if it does start seeing resistance in this zone over here, in this area, and coming down, well, we're on a downtrend again. Does that make sense? Maurice Sawori says, hi there from the UK. I really need to know what to do, as I'm down $25,000 on my stake and it's making me so ill. I think that's what you mean. I'm trying so hard to gain it back and learn, but there isn't enough hours. Okay, so firstly, if you are not in a leverage trade, simply stop doing everything you're doing. All right, if you are trading some altcoin, shitcoin, whatever, just like get back into USD or BTC, whatever. You do not seem to be in the right. I shouldn't be giving you any financial advice whatsoever, and this is not bordering on financial advice. This is kind of crossing the line over here, and I shouldn't be doing that, but I can tell that you are not in the right state of mind to be trading whatsoever. That's what I can tell you. I can tell you that you are not in the right state of mind, because you're literally saying things that is a huge red flag when you're saying, I'm trying to make it all back. You are revenge trading right over there. You may not see it, you may not admit it, you may not like hearing what I'm saying right now, but what you're doing right now is probably going to lead to more disaster. It may work out for you, and if it does, good, but in the long run, you're likely going to build a bad habit, and it's going to cost you even more. When you take a loss and it's affecting you emotionally like this, you should just step away, come back with a clear head and reevaluate what you've done, and why it went wrong, etc., etc. There's a lot that you seem to have missed in terms of foundational concepts of trading that you need to revisit after you clear your head. So right now, just kind of take a step back is the least you should do. Tanswan says, Maurice Sawori, apologies for your loss, but we can't really help you with that. Yeah, that's what I should have said. That's what I should have said. Yeah, thank you, says Mark. So haven't taken any other short trades recently. No, I haven't. As soon as I did that, I did not take any short trades. Can you look at Cardano for me? I looked at Cardano at the beginning of the video, Anis. You can take a quick look again. It broke down, man. There's nothing new. All right, guys, I think oh, we've already hit the 2-hour mark. All right, so with that, guys, I will be wrapping up the stream. I hope you guys enjoyed today's video. If you did enjoy today's presentation as well, and you want more like this, definitely leave a comment down below, and at least I'll know, right, that you guys enjoy this kind of content. The more I need to know what you guys enjoy, and I'll likely do more of it, right? If I don't know, I won't be able to do more of it. So hit the like button, share this video as well if it gets more views, etc. It helps if you share it with your friends, your family, because we did talk about things that would help them as well with their mindset. I know I didn't do the best job. I'll do better in the future, but yeah, leave a comment down below, hit the subscribe, hit the bell notification icon. I'll see you guys in the Discord chat this weekend. We will be doing our weekend Catan session with the mango seedlings. Yeah, you guys down? Mark, AJ, you joining us this weekend? And thank you for the rest of you for joining as well. With that, do the mango way, do the stress-free way, do the easy way. Ciao.